All right. So if you're new to trading or you're just not consistent, you're not seeing profits, you're taking L after L, you're probably over trading. That was a big issue for me when I first started, when I first got into the stock market, when I first got into just trading in general. And this applies to all areas of trading. It doesn't have to be just solely the stock market. It applies to Forex, it applies to options, it applies to commodities, anything. This literally applies to anything. And this is what helped me stop over trading. This is what helped me be like, okay, let's take a step back. Let's reevaluate. And let's not overcompensate. Because when you overcompensate, you start taking plays that don't make sense. Or you start taking plays because you have the ability to. And just because you can trade at that moment, or just because you have day trades to blow, doesn't mean you necessarily need to do that. So let me open this up real quick to kind of show you what I do. All right, so the first thing, so I'm the type of trader who I like to scalp. So I'm like in and I'm out in a couple minutes. But what I've noticed, what's helped me a lot, is when I say I'm on the 1 minute chart, right? All right, we open up the 1 minute because as a scalper like myself, we need to know the quick movements. We need to know all that. So this is the 1 minute chart. Everything I need is on this 1 minute chart. But certain times I'm just overdoing it because I see there's so many opportunities. There's so much movement going on. As you can see here, there's a lot of movement going on. This is the 1 minute chart. So what I do is, and what's helped me a lot, let's backtrack. Let's take a deeper look at the bigger picture here. I always go to the 4-hour chart. Always. Before I even look at the 1 minute chart, I always go to the 4-hour chart just to see the general trend of the current market, right? And it looks like right here, we have a previous support at about 130-ish. As you can see, touched a couple times, touch. And then you could see that support became a resistance over here. But then we broke that resistance. But still, the general pattern right here, we're making lower highs. So 153.41, 153-ish, you see? And then a lower high, 149, then a lower high at 138. So this is the 4-hour chart. I just do this to get a bigger picture of where we're headed, okay? So it looks like we're kind of consolidating. We're not really in a bullish or bearish market, but these lower highs are making it seem like we're going to be in bearish territory. So I'm expecting some sort of retracement if we're making lower highs here. If we break this high of 148, 149, then we're in bullish territory. But as of right now, I believe we can have a retracement. I'm not sure where exactly, but that's where I'm thinking. So I'm thinking bearish in my mind, even though it's not. It looks like it's consolidating for the most part, but in my mind, I'm thinking bearish. It's leaning more bearish than bullish. All right, so this is the 4-hour chart. So now going to the 15-minute chart. This is where the next step. If I'm day trading, this is the next step. So we look here. All right, we're like, all right, boom, boom, boom. All right, this is cool. But when I'm day trading, I like to look at the 15-minute a lot because it slows everything down. Because like I said, the 1 minute always overcompensate, not overcompensate, but there's so much going on. So if I'm looking at the 15-minute, so I traded these on this day. This was Monday, I believe, or Tuesday. But you can see here, or even if you go back the day before, you can see that there's a nice little support at 133. Hits again, and it slows it down. Like, it literally makes it so much simpler because it slows everything down for you. And the reason I bring this up, the reason I bring up the time frame. All right, let's go back to the regular camera. The reason I bring up the time frame, it slows it down. It creates a bigger picture for you, and you don't just overtrade because you see. It's not like you don't see every little opportunity, so-called opportunity, when you're looking at the 4-hour, when you're looking at the 15-minute. When you're looking at the 1 minute, it seems like there's an opportunity everywhere you go, everywhere you look. But when you take a step back, be like, all right, Let's go to the 15 minute. Let's go to the 4 hour. Let's see the main direction that we're headed. That's what I always think. I'm always thinking, all right, where are we headed in the bigger picture? That's the first thing I do. I open up the time frame. Second thing I do is, since I'm trading under 25,000, I'm under the PDT rule. So you get you get 3 day trades every 5 rolling business days. So that helps with me not over trading, because you can't trade every day. You can trade 3 times every 5 business days, every rolling 5 business days. So it's not like I can be in and out 5 times in one day. You can't overdo it. So you have to wait for your opportunity to attack. And the annoying part is, say you were to take a trade, didn't go in your direction, you get stopped out, then you're like, I've wasted a day trade. But you don't get into that revenge mindset, because you're not trying to get your get back, because you don't have enough day trades to even do that. So it slows down your framework, because you're like, all right, I only got, let's say I got 2 more day trades to work with. So let me not just hop in every single opportunity, or every single opportunity, so-called opportunity, just because you can. It forces you to slow down, forces you to not waste it when you're under the PD2 rule. Because say you have that 25K, you could day trade like as much as you want, because you're technically a pattern day trader, so you could do whatever. You're gonna think every little thing's opportunity, even if it's not. You're gonna force yourself to be like, oh man, this has got to be a buy opportunity, right? This has got to be a buy. We got to short this, or we got to buy these puts. You just forcing your brain to be like, let's just hop in just because we can, right? When you're in that over trading mindset, you're not thinking correct. You don't have no framework. If you go to my previous video, structure is the key to trading. Structure is the key to the freedom. It's the paradox. You need to have a structure, bro. Like, going into the day, I already know, all right, I have a gist of what I'm going to do. Before I hop into a trade, I know where I'm going to take my money, where I'm going to take my profit, and where I'm going to have my general stop loss. I already know that. So it stops me from just jumping in and out, in and out, in and out. Also, if you're in a trade, say you get stopped out again, I take a step back. I literally get up on my chair. There's a door right here. I go outside, I get some air, I go walk my dog. I go do anything other than look at the screen. Because the more you're focused on the screen, the more you're focused on, all right, let's go make some money, you're going to screw yourself. Because you're going to think every little thing, every little movement, every little price action, any little fluctuation, you're going to think it's an opportunity. And it's not. Also, the last thing I want to help you with, right? I want to help you. The last thing is, I trade stocks primarily. So this is going to be for those of you who trade stocks. But I live on the East Coast. I live in New York. So I only trade from 9:30 to about 10:30. That's the only time I have like the market up in front of me. That's the only time I have the charts in front of me. I'm not looking at the charts all day. I'm not staring at the screen all day. I know that's when it's the most volatile, for me at least. Or the most volatile is when market opens, and then like an hour, 2 hours maybe. And then after that, like midday, it's not as volatile. Then later in the day, maybe it is. But I don't really like to trade like at 3 o'clock. So I'm in 9:30, I start looking at the charts 9 a.m. I stop looking at the charts around 10:30, 11, and I'm done. I don't care what's going on. I don't care what opportunity is available. I'm done. I'm personally done. Also, I work a job, so I don't really have time to be looking at the screen all day. So those are the methods on how I stop over trading, because that was the biggest thing. Like, you just force yourself to lose money, because you think every little thing is a play. You think every little thing, I'm gonna make money on this, I'm gonna make money on that. Nah, just chill out. Open the time frame up. Go take a step back. Go look outside. Go walk your dog. Go pet your cat. Go walk your turtle. Step away from the screen. maybe if you have that 25K, maybe go under the 25K so you have the 3 day trades, the 3 rolling day trades every 5 business days. There's ways to it. Not everything you see on the screen is going to be an opportunity. You don't have to take advantage of every opportunity that's available. If you have one good opportunity, that'll cover you for the month, depending on how good that opportunity is. So don't overcomplicate it. At the end of the day, it's simple. You want to dance with it, dance with the market, like it's ballet, like it's ballroom dancing, like it's merengue, bachata, whatever. You want to just chill out, dance with the market. Don't overcomplicate it, and don't overdo it. Peace.